Why did 95% of the people lose money in the stock market on Friday? What does implied volatility mean, IV? What does EM mean? What is the VIX? How to break it down and how to trade properly. Watch very closely because this video is very important, especially for next week as well. On Friday, we had a massive drop in the S&P 500, closed at 1.43% down, but like the low was about 1.90 to 2%, hitting $644. Something called implied volatility, which is the IV. IV ruins every single thing from your zero OTM out the money versus in the money, and that's why most people lost their money. Now let me break it down. Let's go to 2 days expiration because 0 days expiration already expired. I'm doing this video on Saturday night, so let's break it down. Out the money means you're buying something that's out of your strike price versus in the money where you're already in your strike price. Okay, that's the difference. Out the money gets hit with implied volatility. If implied volatility is above 20, you're going to lose all your money if you do OTM, unless if you're in and out within 5-10 minutes of your options. Versus ITM, where it's way more safer, you don't have the implied volatility so strong, and you can still trade and be calm and secure. That's the difference between ITM and OTM. Implied volatility measures what the expected move is for the upcoming 24 days to expiration for the stack for the next 24 days. Now I'm doing this in SPY, so let's say 20%. So we're expecting a move of about between 10 and 15%. About, I can't do the calculation right now, but do it yourself, like whatever. Ask ChatGPT, you'll figure out exactly what I mean. It works together with the Delta, Gamma, Theta, BP, all these things as well. Now let's break down the VIX, which is extremely important for next week. Don't be surprised if you see the VIX above 30 again. We had it, I think, on March 9, was it? Right over here. Yeah, we had it on March 9 when Iran started, with Israel and America. Everybody started together, and like people were so uncertain, especially then. I think it was on a Monday as well. It was terrible, 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 terrible. Don't be surprised if we see implied the VIX going above 30. What does the VIX do? The VIX measures implied volatility from the overall market from the S&P 500 over the next 30 days as well. That's the difference between the VIX and implied volatility. Implied volatility measures it works together. The VIX and the implied volatility literally works together. But if you look at the VIX, you'll have a brighter picture of the overall market versus the IV, intrinsic implied volatility, where you'll know what kind of contracts to buy or sell. That's the difference, especially if doing 0 days expiration. It's very, very risky. Now let's break it down. The VIX usually trades at below 16. If it's below 16, the market is not in fear territory. The CNN fear and greed is holding by about 15, which means the market is in extreme fear territory. That's why we're sitting at about 26, right? Friday alone, let's go to 10-minute chart. Let's break it down. Friday alone, we hit a high of 29.28. We couldn't break above 30. If we would have broke above 30, it would have been way, way, way brutal in the S&P 500. We would have been down with about 3%. That's how bad it was with the market. Now, Trump is threatening as well that he wants to cure all the oil. He wants to take over the whole world, etc. And we can see it just like what he's doing. He just wants to die a hero. That's all he wants to do. His ego is not letting him do anything else. That's the difference. So now, because the political news is taking over the stock market, we cannot look at technicals, indicators, or chart reading. We have to go with the news. You have to be every second with the news, especially during war. And that's where you get the VIX, because the VIX is going to tell you if people are going to be buying in or selling, buying stock or selling stock over the overall market, right? Because it measures the S&P 500, and the S&P 500 has the top 500 companies throughout from the whole entire market, right? So that's the difference. So the VIX usually trades at below 16. If it's below 16, that means the market is not in fair territory. If it's above 16, that means the market is coming into fair territory. If it's above 20, the market gets into even more fair territory. If it's above 25, the market is in extreme fear territory. And if it's above 35, then the market crashes. That's how we saw it. We'll go constantly on and on. Let's go to the daily charts. We can see it explode actually all the way up to 60. When was this? This was April 7 when tariffs came out, and we can move all the way down, explode to 65 as well on August 5th, 2024. Don't remember what this is, but it makes no difference. Point is, like, whenever there's the uncertainty, this explodes. And this is where it comes in, where you can buy also options as well. You can buy calls or puts, right? Calls is you're saying that the VIX is going to go up. Puts is you're saying that the VIX is going to go down. So now, if you believe it, like me, it's going to go above 30 this week, you can buy calls. You can do 4 days expiration, or you can do 11 days expiration, etc. The contracts are a bit more further out versus the S&P. The S&P is so big, the ETF, the S&P, SPY, and QQQ, two biggest ETFs. QQQ measures the AI sector, etc., all those things. versus the S&P takes like all random companies, but the top 500 best companies globally. And like I mentioned as well, that we have over here a nice double top as well that we're cracking in my previous video. You can go watch it. I explain where I believe S&P is going to go up. But again, this is all not financial advice. I'm just stating my opinion and telling you the political news as well, what's going on. So now if we go above 30 this week, we can see S&P. Let's go back to the S&P. We can see the S&P dropping, making a brand new low again, and we can see possibly hitting about 590 as well towards the end of the week. This is only if there's literally also negative news as well. If what Trump is stating that he wants to take over the oil and he wants Iran to stop and open up the doors again to everybody and whatever, like everything should stop, and that means it's very positive news. If it happens, then of course we're going to be skyrocketing. As soon as the war is done, by the way, don't be surprised seeing the SPX and let's go over here, the Dow Jones going over 1,000 points. That's exactly what happened with Iraq, where about 15, 20 years ago. And same thing's repeating. Same charts are repeating. Same thing. Everything is repeating. Every single thing is repeating. Now, if there's no news while you're trading, right? While you're trading, let's say, then you can look at chart patterns. Do not look at oscillators, which is the RSI or the MACD, because this is not going to help you in this market trend. What's only going to happen is double tops, double bottoms, head and shoulders, all these kind of chart readings. Only chart readings is going to help you trade. Okay. Now, don't forget, the OTM out the money, extremely risky, especially if the market is in fair territory and the implied volatility is above 20. If it's below 20, you can really cash in. Actually, if it's below 20 and let's say there's a double top, let's say, right, and we're gonna have a nice dollar or two drop, right, then your option can go up with above 100% your money, right? That's what people cash in. But you have to be really experienced. It's only meant for experienced traders. If you keep on following me and you subscribe to me and you share a like, etc., then we're here to teach you and we're here to learn together. You're going to learn a lot. There's still a lot to learn. Everything. So I just want to get your attention why people lost money as well on Friday due to implied volatility.